Good morning, investors. Welcome to the January 27th webinar presented by Portfolio Builder. Folks, my name is Dean Gallagher. I'm an investment consultant and partner here with Portfolio Builder. I want to take this first few minutes to thank you very much for joining us here today, folks. Thank you for taking our free trial and welcome you in to the presentation here today. Okay, what we're going to do is a quick introduction. Okay, I'm just going to talk about two of our portfolios here that really our clients under the $500,000 mark are using. Okay, and then I'm going to hand it over to Jason for the official presentation, but we're just going to do a quick update on the portfolios first, what the performance looks like. And with Safe Alpha, folks, we structured this exactly 2 months and 2 days ago. Okay, you can see we started with a balance of 1 million exactly on the nose. Okay, the liquid assets today is now 1.2 million. Okay, 1.218. So that's what our account has grown up to, and the overall P&L in the positions we have right now, guys, is $207,460. Okay. Now, just to be completely transparent with you guys, I want to show you that we entered these trades on those dates, okay? So let's see here. So that doesn't actually show all of the trade time. So that was just the last day we added some shares. That was weird. I don't know why I didn't show the add date there. Okay. But let's see here. We could see UVXY. So that's weird. It shows the two add dates on UVXY. I don't know. The Thinkorswim paper trading platform has been pretty glitchy this week, guys. I used to actually show my real account, but then we realized we were doing 2 million minutes a month of YouTube view time. So I stopped using my actual accounts, right? But so we switch over to the paper, and for some reason in UVXY, you can actually see why it says November 24th here. Okay, that was the first date we picked up some UVXY shares. Okay, and I'm not sure why the TQQ is glitching and not showing that as well. That is super weird. Okay, but we did structure this on November 24th. Okay, we just bought into this GBT position yesterday. We'll actually be selling this ERX position today and restructuring into a neat play for the Biden administration and for really a push into EV energy, guys. Okay, but so this position that we have a small profit on will go away today. We bought this ERX position at $13, $13.23 initially. We'll be selling it today at $16.03. Okay, our GBT position we bought actually just yesterday. Okay, so you can see how it says 126 on here. Okay, so this is the portfolio set, guys, and we started this once again on November 24th with $1 million. It's now ticked up quite a bit. So pretty nice to see that. We did lock in some gains yesterday of $12,000 on our silver position. So the silver position is gone. We will be eliminating our oil and gas position as well. And our newest position we picked up is GBTC. So pretty cool, guys, and running at over 20% performance to the upside in just over 2 months. So 2 months and 2 days, guys, produced 20% return, much better return than the S&P 500. Okay, which is really cool, and we did it with a nice hedge in place. Okay, with UVXY. So not only did we outperform the market, but we did it with a huge hedge in place. So safely outperforming the market. Sure, there's a lot of people you can go day trade or swing trade, do all this crazy, super aggressive stuff. I met this guy this morning that was trading penny stocks. He was going all in at $500,000 in penny stocks. Nuts, right? And I try to explain to the guy, look, that's dangerous. You're gonna lose a lot of money eventually. But hey, those lessons are hard learned. We like to show you guys how to take the much safer route when it comes to investing. Okay. And this is how you do it. You use risk parity. You counterbalance all of the assets that you have in place, okay, to grow smoothly and in a really calculated, protected manner. Okay. And so that's what the Safe Alpha looks like, guys. Really nice play here with this is a beautiful inflation hedge. Bitcoin is actually working as a better inflation hedge, and it's really cool, guys. As long as you have TD Ameritrade, you can own this in your tax deferred account. Okay. I know some others do. I think Schwab is still allowing you to own GBTC. E-Trade is as well. Okay, and Fidelity is, but there are some brokerages out there that aren't. I think Merrill Lynch is one of them. There's a couple, but you want to get out of those crappy brokerage guys and get to TD. They're the best. Okay, Schwab and Fidelity are good too. Okay. So we also have our growth play here, guys, with the TQQQ ETF. This is a basket of 103 of the top growth companies on planet Earth. These companies really do control our governments and our central banks around the world. So for me, guys, I'm going to attach to these coattails, ride it, and absolutely, have a nice basket allocation here. And this is going to be the one position, folks, I am never going to sell. Okay, you're gonna have to pry it from my cold dead hands because the performance is amazing, and the top companies inside of this ETF own and control our governments and central banks around the world. Okay, so attached to that, guys, they're going to ensure that they go from being billionaires to trillionaires. Hey, we can go from 6 and 7 figures up to different levels. All right, so let's do that. Or if you're 5 figures or 4 figures today, guys, let's go from wherever you are, elevate from that. Okay, this is going to be a safe alpha vehicle to be able to do it, hence the name of the portfolio structure, Safe Alpha. Okay, and we have our volatility hedge that keeps us safe, right? And as you guys saw, when the market was down a little over 2% earlier, this volatility hedge was pushing up and actually showing a profit. Okay, now that the market's recovering a little bit, it's not now, but this is in place, guys, to keep you safe in that disaster scenario. Okay, and no joke, if you just have a 10% allocation there going through the last meltdown in Q1 of 2020, you could actually make 22% if you did it properly. Okay, at just a 10% allocation, it doesn't matter what you had on the long side, as long even if the stuff went to zero, because this actually went up 1,227% during that crash. Okay, so next, guys, let's go ahead and take a look at our most aggressive setup, the Absolute Alpha Bootcamp. Now, we started this portfolio with just $100,000 right at 3 months ago. Actually, Thursday will be the 3-month mark on this portfolio since we structured it. Okay. Pretty neat, guys. Net liquid is $130,000. Plus, we have an overall locked-in gain here. So net, guys, up just shy of 40% on that portfolio in 2 months. So an insane outperformance of the S&P 500. Kind of looking at a factor of about 8x on this one. In that same time frame, it's going to have some more volatility, but we do have a different mix of asset classes in here. Okay, completely different from one to the other. Okay, and these are smaller asset classes, guys, that will move faster. Okay, so we're targeting 100% annualized return. With the way we're running now, that's probably going to be extremely light on what we deliver. But our clients really love this, that want faster growth of their capital. All right. And with that, Jason, I'm going to go ahead and hand it over to you, bud. And just real quick, guys, going to encourage you to save my phone number before I do that. Okay. In case you guys have any questions after the webinar, it's 505-322-7515. With that, Jason, I'm going to go ahead and hand it over to you.
Okay. Excellent. Thank you, everybody. All right. Nice intimate crowd today. Excellent. Okay, quick shout out to some of the live attendants. Got Dino, Eston, Hugo, Ray, Robert, Ryan, Trevor, Ludmilla, Mark, and Victor Cox. Excellent. Okay, test 1, 2, 3. How's that sounding? Does that sound good?
Yeah, perfect, Jason. Great. Yep, great position.
Excellent. Okay, wonderful. So today we're going to show you our magic formula for success. We're going to walk you through why it works, why it's going to probably outperform the coming years, especially the near-term future, which is very bullish with $1,600 stimulus checks about to be unleashed into America, where we know all of that money is going to go into call options and what we're anticipating for how to play the market safely. So what I want to show you is actually a huge breakthrough for the financial advisory service market is what you're seeing on the screen right now. And Dean and I have been in this for well over a decade, representing every guru under the sun. I mean, we've really represented all of them. And we found all of them tend to brag about making all this money, but when we would send out our marketing team to go collect testimonials, the truth was almost nobody was getting the same result as the guru. And so what I want to promise you today is that not only are we going to show you the exact formula for success, if you copy it, you're going to get the exact same result that we do. And we've had, Dean, tell me some of the stories you've had of people doing the free trial, how much money they've made in the first week of the service.
Yeah, so Jason, our top client Ron, he's now following our pro strategy with a lot of capital. But our top client Ron, he's up in Wisconsin. He's a great guy. He actually put quite a bit of money into our portfolio set. Basically, in the middle of March, when we actually had the worst sell-off week of 2020, and he made $97,019.89 during his free trial. Okay, so pretty neat to see that, and it was really funny because his wife actually, she had about 3.6 million in Goldman Sachs under management. Her account that same week, conversely, folks, and I'm not kidding you, lost almost $1 million that same
Ooh.
week. That same exact week. And so, long story short, he started freeing up some of her capital to go into our Safe Growth Pro system. But it took her almost a year, Jason, to get out of that structure with Goldman. But yeah, so his wife, I'm not kidding, his girlfriend went down almost $1 million under a professional, aka professional management here with Goldman Sachs, as he made 97 G's in a week with just $500,000. So it's
And to be
500.
clear, it really doesn't get better than Goldman Sachs. That's really the top echelon of money management.
Yep. Yeah, absolutely. So that was the top, Jason. We now have 5 people that have made over $40,000 in their free trial. We got a lot of those people in December and January that just made over 40,000 bucks. So that was really cool. And then I know just off the top of my head, Jason, we're now over 300 people that have made somewhere between $1,000 and $20,000 during our free trial. And so it's really cool to do that, guys. And that's the opportunity we're going to show you here today.
And
Okay.
also, we actually have Jeff Olson on there. Jeff, you got your microphone?
Yes, I'm here.
Oh, cool. Jeff, tell everybody your story about how you saw us on YouTube. You started following the product. Next thing you know, we've hired you to come join our team. If you could just give a quick story of kind of, finding us on YouTube, being skeptical, going through the free trial process, just from start to finish. Take your time on that story if you don't mind.
No, I don't mind at all. I enjoy telling it, and I really don't get to tell it very often because most people don't care.
Well, now you get to tell it every day. So
Yeah, the reason I'm even here today is because of the meltdown in February and March. I wasn't one of the millionaires. I wasn't even part of the program yet. I lost about 40%.
oof.
So at that point, I went into straight cash. I got really upset, and I sat back for a couple of weeks and decided what I was going to do. Because over the years, let's see, I've been following financial subscriptions for about 13 years now, pretty deeply. And I've grown very skeptical of them. So I started looking again. And then, like Jason said, I just found them on YouTube and started talking with Dean. And I didn't want to stop with my money. I didn't know where to put it. So I decided to give it a try. And back then, they had a small program for options. And so I joined the options program. I started doing okay. And then I liked you guys mostly. I really liked what Jason did, the in-depth, the news and the reviews and all that stuff. That's what I really enjoyed the most. And that's what kept me going. So then I decided to, I don't want to say upgrade. I just joined the next program. And that went really well for me. And then they had an opportunity to join the boot camp at a great price. So I went all in at the boot camp. But you probably couldn't name a financial subscription out there that I haven't heard of or I haven't looked at or read. And so what I found, and Jason kind of played a game of financial investment subscription leapfrog, and he jumped right to the top of my list. And so I kind of got rid of, I would have to say, as of today, I haven't renewed 75% of my subscriptions. I just let them go because I no longer care to be bothered or mixed up by them. So I right now, I do not have a single stock investment, not one pick that didn't come from Jason. And so just before this meeting started, I went out to my 2 different portfolios that I use. And even though there's been a little bit of drop down the last few days, I have how do I put it? It's a hybrid between the pro and the absolute, and I have the crypto portfolio. About 30 minutes ago, my hybrid portfolio, even after the drawdown, was up 26%. And my crypto portfolio from the boot camp, and it's been coming down. Really, it's coming down to up 140% in 120 days. So those numbers I gave you are all since September 1st. And then I just kept talking with these guys and kept chatting, and we built a good relationship, and things evolved into where I joined the team, and I couldn't be happier.
That's awesome, Jeff. Thanks so much.
Yeah.
Sure.
And so just real quick, team, Jeff is our second client turned team member here with Portfolio Builder. So pretty cool, guys. And now Jeff is actually going to help our existing client base, understand what it looks like, what some of the other portfolios look like, and also how to get them upgraded into the lifetime memberships. And so Jeff, thank you for sharing that, bud. Just incredible results in that time span. So great job. And thank you so much for joining our team. We do appreciate it from the bottom of our hearts.
Yes, sir. And thank you all very much. You're welcome.
Thanks, Jeff. Excellent. Very good. Okay, guys. So let's get to it. Let's tell you the formula, show you why it works, get your account built. And then Dean has some special content to provide you towards the end of this presentation as well. Okay, so wonderful. This is the Safe Alpha Advisory. This is really a hot product for people with less than $500,000. If you have more than $500,000, at the very end, I am going to show you what Jeff's in, which is called that pro strategy. It's going to be exactly what we're going to teach you today with a very simple portfolio expanded, and it's just going to be more diversified and global in nature. So we'll cover both of these products. And then for those of you who do want to put the pedal to the metal and go for the higher returns, which makes sense when we're in a quantitative easing period. We're going to talk about the creation of money today, why that's all that matters for predicting markets. We're going to show you that hyper aggressive strategy as well. Okay, so let's start from top. Safe Alpha Advisory. This is how we present the trading plan. And this is really the big breakthrough. What we found is if we stick to a strict ratio of shares, then everyone gets the exact same return down to the penny. I'm going to tell you down to the frickin' penny. You're going to get the exact same return as Dean and Jeff, as well as the model portfolio over the same period of time. And that's because we tell you exactly how many shares to invest per unit of investment. So this is mutual fund NAV type portfolio management. And right now, one unit following our strategy comes in at $1,173. Now, if I had $11,730, just see what happens. It's going to multiply the shares by 10, but the ratio remains the same. So it doesn't matter whether you have $10 million following the program or if you have $1,000 following the program. We're all going to get exactly the same results. We're all going to get filled extremely easily because we're trading the most liquid markets in the world. And this is really the key to success. So let's walk through it. I want to teach you why this is such a successful strategy. And it's going to be a lot safer than currently what you're doing. I can really promise you that. Almost without question, this is going to be much safer than what you're currently doing. Okay, so the whole thing's really going to revolve around picking the best group of stocks to bet on for a long period of time. And what we're going to really tell you is to stop trying to predict what the winners are. Okay. We're not going to try to predict the next Amazon in this portfolio, when it's in its infancy. So what we're going to actually do is look for the safest bet. We would much rather pick the safest companies to put our money behind and then sit back and hedge accordingly. And so what if I told you the richest people on the planet know exactly where to park your cash? Okay, so you're going to kind of laugh here, but every stock we're going to invest in actually is represented by the richest people in the world. What a coincidence. So we've got Jeff Bezos, Bill Gates, Mark Zuckerberg. And I want you to realize Warren Buffett is pretty much all in on Apple, and that's going to be our largest position. Okay, we got Elon Musk up there, the Google buddies. Okay, Walmart sneaks in there. And so this is going to be the group of stocks that we're going to put you into quite aggressively, but hedged with risk parity. And so we got Apple, which again is Warren Buffett's all-in piece. We got Microsoft with Bill Gates. We got Jeff Bezos with Amazon, Zuckerberg, Facebook. We got the Google buddies with Alphabet. We got Elon Musk, now the richest guy on the planet with Tesla. Okay, then we got NVIDIA, Comcast, PayPal. All these companies have huge monopolies. They're growing rapidly. They're creating the most cash flow. They have the most call option buyers. Realize when people rush in to buy call options, right now we're in a mania where we have retail buying call options on really specifically these stocks right here. Almost 20% of the trading volume now is call options from retail. Well, guess what? The person who's going to sell that call option is going to do the covered call strategy. This is going to be huge, massive hedge funds and broker dealers. So the more people that want to buy call options, the more that the people selling them are going to buy a lot of 100 shares per call option they sell. This means they really can't lose if the market goes up or flat. Okay, so this is creating an absolute mania specifically in these tech stocks. What's more important is these group of stocks are buying back their own shares. So over time, over the last 5 years, Apple has reduced the outstanding shares by 25%. Last year, they grew their revenues 2%. Their stock went up double. Okay, so it's just this massive self-fulfilling prophecy that as long as the Fed wants to do 0% rates and make the bond market worthless, investors have nowhere to go. We're going to prove that to you, that there's really only 3 intelligent ways to really guard your cash right now, your wealth. What else do these guys do? They have investment grade corporate debt. This means they can go borrow nearly an unlimited amount of money. Not that they need to, they're also sitting on huge, huge stockpiles of cash, but they can buy unlimited amounts of money at very low rates. In fact, last year, Microsoft was going to Europe and they were getting paid to issue negative yielding corporate debt. Unbelievable. So they're turning around and they're acting as a private equity firm. They're buying out everything. And typically when they do a buyout, the market cap of their company goes up more than the cost of the acquisition. Once you couple that they're also putting $10 to $50 billion a year into AI and robotics, it's just insane. They're the #1 lobbyist of every government around the world. Okay, so think of any sci-fi movie. These are the companies that are going to create that future. So you don't need to go really drum up some wild penny stock to do really well in retirement. Your best bet is to go to the biggest players and park your cash right behind them. Now, if you own these stocks already, I would not be surprised. If you don't, you're getting left behind and probably pretty upset by that. I'm going to show you how to actually increase your returns on this exact group of stocks 18 times faster. Okay, one ETF switch in your portfolio is going to generate profits 18 times faster than just buying these stocks outright. Okay, so let's go ahead and take a look at that. So how do you play that group of stocks with the least work? The best way to do it for most of the last few decades would have been to simply buy the QQQ, which is the NASDAQ ETF. And I want to point this out. If I scroll back a little bit, I really want you to realize we're in a very similar situation today in 2021 as we were in 2010. Okay, so in 2008, we had a housing crash and the stock market sold off for about a year. And then right at the end of 2008, what did they do? They went into heavy duty quantitative easing. I'm going to show you what they're doing in the last year and planning for the next several years is much more aggressive quantitative easing. But what was the effect? You can see the NASDAQ screamed higher. And if you had bought at the all-time high in 2010, so you waited for the crash, you waited for the government to bail out the banks, then you waited for the Fed to monetize the debt and do what's called quantitative easing, and you bought the NASDAQ at all-time highs, just like today, you made a 560% return in the last decade. Not bad, okay? Not bad at all. And the worst thing you ever did during the entire decade was even consider selling. Okay, that would have been the worst thing you could have possibly done. Now, I want to show you what's going to happen if we buy a slightly different ETF that's going to essentially triple your exposure to this same group of stocks. Okay, so this is going to be the triple Q. Now, again, we're going to buy at all-time highs, and instead of just putting $1,000 to work with the triple Q, every $1,000 you put into the NASDAQ, they're going to triple your exposure. So if you like Apple, like we do, like Warren Buffett does, if you switch from owning Apple or owning the QQQ, what's going to immediately happen is you're going to have 3 times the exposure. Now, again, if you thought with a quick glance that would only increase your return by 3 times, you're wrong. Because again, if we multiply 559 by 3, you're going to be sitting closer to 600 or 1,627% return. Okay, but that's not the hyper compounding effect. When we go into the triple Q, the hyper compounding is explosive. And so if you put $1,000 back in 2010 in March into the triple Q, the TQQQ, that $1,000 is now worth $106,000. Now imagine you're a millionaire and you parked $1 million into the triple Q, and then you waited a decade and now you're worth $106 million. Okay, so just realize that by buying the right ETF, not only can we have an ETF that will automatically rebalance your positions with new capital flow. So as new companies are growing or shrinking in size, the ETF is automatically rebalancing your exposure. This means you never sell and you never realize a taxable gain. Okay, we're going to talk about the one scenario that would scare us out of this position and why we're likely decade, 2 decades, who knows, maybe it never happens. Okay, there's really only one thing that would really scare us out of this position once we fully understand what's happening in the economy and the creation of money. Okay, so if we go back to our trading plan, you're going to see the very first position we're going to put on is 8 shares of the triple Q per $1,173 following the trading plan. This is going to represent 68% of your total portfolio. And the key here is the rest of the portfolio is designed to protect you against risks that could negatively affect your growth tech position. Okay, so this is the big money maker. This is the key position. Everything else is going to revolve around that. Now, immediately, people are worried about volatility or downside. And I want to point out that with our program, you're going to be sitting pretty if there is any kind of a pullback. And so this is our crash insurance hedge. It's called UVXY. Now, previously, you had to be an expert options trader or futures trader to have a chance at really aggressively hedging a portfolio like this. But thanks to UVXY, they do all the fancy option and future trading for you with 1.5 times leverage. So if you have around 10 to 20% of your account in UVXY, you are completely protected against a stock crash. Now, 10% is about our minimum we like to hold if we expect an explosive move higher, which is what I'm expecting. Schumer and Pelosi are getting ready to unleash another $2 trillion stimulus deal in the next 2 months. And what do you think that's going to do to the stock market? Well, just look at what's happened every time they've passed a stimulus deal. The market explodes higher. Pelosi goes and buys out of the money call options herself on Tesla, and they're all getting rich as they essentially devalue the dollar. We're going to really argue that what's really happening is your dollar is getting crushed and everything else is going up in price because of that. But just look at this. I'm going to take off the percent gain. Had you not really cared why, but just religiously had your crash insurance, in February, UVXY was trading around 1036. Okay, today it's at 12. Okay, when we just increased our position a day or two ago, is at 1050. Okay, this thing climbed as high as 135 as we hit limit down after limit down during the global lockdown panic, completely absorbing all the downside. And what we're going to tell you is that as long as we're in a deflationary bond market, okay, we're going to tell you what exactly does that mean. Essentially, if there's no competition from the bond market or the dollar, we're going to look at every sell-off in the stock market as an opportunity to cash out the crash insurance. And again, for 500%, 1,000% gain. Everyone else is going to be freaking out. They're going to be down 20, 30%. There's going to be blood on the streets. You're going to have either a break even or a profit from your crash insurance. You're going to cash out that insurance and you're going to buy more stock with a big smile because you know what comes next. Any stock crash, the government's going to freak out, spend trillions of dollars it doesn't have, and the Fed's going to monetize it with quantitative easing, and you're going to rocket ship right back up. Okay, so that's the main plan. Buy the best companies, hold for a long time, decades, and then hedge accordingly. Okay, sell the hedge, hold on to the stocks. That's the big plan. So UVXY is the ultimate hedge. And if we go back to our trading plan, step 2 is to protect every 8 shares of the triple Q by buying 11 shares of UVXY. Now in 6 months from today, after we've had the next stimulus and we've melted up significantly higher, most likely we might shave off some of our long side and get a little more defensive and catch that pullback. Right now, I'm running this portfolio red hot because I'm expecting it to melt up on the next stimulus deal. So again, this is the least crash insurance we'll ever have, is about 10% of our portfolio. And this way our clients, who are almost all in retirement, sleep like babies. You really, in fact, if a crash comes, you know that better returns are dead ahead, because what's going to happen? You're going to cash out the crash insurance, buy more stock, and then you know what the government's going to do. It's going to come out with a new $2, $3, $4, $5 trillion stimulus package, which is only going to devalue the dollar. I'm going to walk you through that. Okay, so step 1, stop buying boring stocks individually or just boring ETFs like the QQQ. We want to get free money from this ETF universe, and the triple Q does the job. It's not delivering 3 times the return. It's delivering quite literally 20 times the return. So you're just much better off having less exposure to the triple Q and then hedging more aggressively. Okay, you're going to grow wealth much faster. Next step is don't drive your car without a seatbelt. Don't get on the motorcycle without a helmet. Okay, by adding UVXY, you're converting whatever portfolio you have into a tank. Okay, you're going to demolish anything that gets in your way. Now, what we're going to do is talk about what's really driving stocks higher, and will we get the same return, which was 10,000% from 2021 to 2031? I'm going to argue not only should you expect to get the same return, you should expect to get a better return. And so why do these stocks keep going up? Why did Apple double in value with only growing revenues 2%? Is it all because of stock buybacks and call options? I'm going to argue no. I'm going to say that's half the puzzle. The other half is what your government is doing with its budget. So the big picture is, since about the dot-com bust, the government has been going aggressively into debt. And so what you can see, this is in trillions of dollars, by the way. You can see all the money the government's spending that it doesn't have. It's just massive. Here's another look at it. We're running anywhere from 150 to as bad as a $750 billion monthly deficit. That means the government is spending hundreds of billions of dollars every single month that it does not have tax receipts for. So where does all this money come from? And where is it going? So again, this is just a breakdown from the Treasury. And here's the breakdown just in December. Now in October, it was a $300 billion deficit. Here's December's latest update. And what you need to realize is the costs that America has to spend money on are going to grow exponentially over time. They're not getting smaller. Okay, so the liabilities of US government into the future is 100 trillion plus. Okay, and there's no way we're going to be able to create that much taxable income. So their plan is clear. They're going to print their way out of this. The more money they print, the less valuable the debt is, and it's really their only solution. And it's a worldwide solution. We'll show you that as well. But right now, around 5 to 12% of all income that America collects is going to interest. Okay, so we're like a high-risk credit card company right now, operating completely on debt. We're not operating on free cash flows as a government. So the bottom line is the US government has gone wild. It's nothing new. It's the last 2 decades, and it's really getting worse over time. If we go back to this, does this look like the deficit's getting worse or better as time progresses? It's getting way worse. It's trapped. Okay, we're really trapped. And so it's a really easy prediction that we're going to have growing deficits over the coming decade, which is going to equate to higher stock prices. Okay, and the more debt we go into, the faster the stock market's going to go up. That's what I'm going to prove to you today. And so we can break it down. They have a nice chart right here. This brown line is showing you the deficit per month over the last, 15 months. So June and April were really gnarly with over a 600 and over an $800 billion deficit. And guess what? The Democrats have complete control over the government. They're going to go spend more money than you could even dream of. And there's nothing anyone can do to stop them. Nothing. Absolutely nothing. They control the Senate, the House, and the Oval Office. So it's a free pass to go devalue the currency and hand out money to all their buddies. And where do you think all that free money is going to go? Into the real economy or into financial assets? Okay, I think we all know the answer to that. So how do they go about doing this? How does this little scheme of theirs work? So, okay, you get the 3 branches of government to approve a budget. Okay, voila. They're already talking about doing about $2 trillion of stimulus in the next 2 months. Janet Yellen's talking about doing many more $1 trillion of stimulus this year. The Green New Deal, the climate change, that infrastructure is going to be 5 to 8 trillion. It's just insane. It's pure insanity. So if you can't beat them, you better join them. Here's the auctions. Okay, this is how we go raise the money. Now, who buys all this debt? Who is financing America? Okay, so every week they announce all their different bills, notes, and bonds they want to sell. I'm going to tell you this is the big secret to why stocks go up, more so than anything else. All right, so who buys it? It's called the primary dealers. Here they are. So look at these guys. These guys get the best deal in the world to make guaranteed profits slinging US debt. And I'm going to tell you who does almost all of it. It's JP Morgan. That's the big American bank. So JP Morgan has this deal with the Fed because they're a primary dealer that they have to buy all of our debt that's unwanted. So whatever the central banks aren't buying, JP Morgan and these other primary dealers have agreed to pick up the rest of the tab. But the catch is they get to borrow that money at the effective federal funds rate. So whenever the government sees an economic crash, deflation in the economy, like locking down the world, they put interest rates very low. Right now it's at 0%. Okay, same thing they did in 2008. And so what's the plan? Now JP Morgan can borrow money for free at an unlimited quantity. They get to buy all this debt, and then they get to resell it to whoever wants to buy it. Okay, that's pension funds, central banks, hedge funds, broker dealers, all sorts of people want to have this exposure. And what about all the debt they can't sell? All right, that's where the real magic happens. So it's great if we can outsource our debt to other countries and steal their resources. But guess what? If everybody around the world is broke at the same time, Nobody wants to borrow, or rather lend you money. And that's where we're at right now. So what I want to show you is what happens with the unwanted debt. This is called quantitative easing. When the government's spending more money than it can actually raise from financial markets, central banks monetize that debt with what's called quantitative easing. So to put things in perspective, for every dollar that's been printed in the 300 years of American history, we just devalued the value of the dollar by 40 cents or 40% in less than a year. Okay, so the quantitative easing that gave you the last massive stock bubble, okay, was $1 trillion a year over 5 years. Well, we just came in with essentially $3.5 trillion in 6 months. So we're printing money nearly 10 times faster than the last crisis, because the economic damage is massive compared to just lending money out to a bunch of people who can't afford mortgages. Okay, this is a devastating collapse of our economy. It's going to take a long time to recover. So central bankers know they really have two options, and governments as well. Option one is the path of austerity and protecting the value of money. That's almost a guaranteed solution to go into a Great Depression. Okay, the other alternative is to stimulate it. Okay, so that's their solution. They want to create stimulus, devalue the currency, reallocate capital where they think the economy is broken. And unfortunately, in that process, a lot of money just goes out to all their donors and it goes straight into the stock market. Okay, so the more money they print, the higher stock prices go. That's a fact. And they're printing money at the fastest pace in history. And it's not just the United States. Let's go over to Europe. Well, okay, sorry. First, we're going to show you what the effect is of the dollar here. Then we'll go look at Europe, Japan, and China and see if they're doing the same thing. This is the value of the dollar over the last 100 years. Outside of the Great Depression, post-World War I, when we bankrupt Germany, Europe was in a depression for a decade, didn't hit us till the late 30s or the mid 30s. That's the only time the dollar's ever gone up in value. Okay, otherwise the dollar has crashed 98% like clockwork year after year after year, because the government spends money it doesn't have. To do that, it has to print money. It makes the value of each dollar worth less. So it doesn't really take a rocket scientist to realize everything's going to go up in cost. Now, real estate rent is up 350% since the 80s. Medical costs is up nearly 600%. Just the cost for college is up 1,600%. What about electricity? You think that would get cheaper over time? Oh no. Even electricity since the mid 70s is up 1,000%. Okay, it costs 10 times as much money today to keep your electricity on as it did just several decades ago. So the big picture is that the cost of everything is rising rapidly. And if we use the old 1980 CPI model, we're actually seeing the value of your money fall at 10% right now. It's probably going to push its way towards 15 to 20%. So if you're in cash, let's say you have $1 million. Next year, anticipate it only having a purchasing power of 900,000. If you wait 5 years, you'll be lucky. You'll be lucky if $1 million has the same purchasing power as $500,000 today. Okay, so now you're starting to realize why investors are freaking out about being in cash, and they're trying to guard their wealth with the only assets that make any sense. Okay, so what can we put our money in? I'm going to argue you can't put it in any fiat currency. Okay, every country in the entire globe is running massive deficits. Okay, you can't put it into bonds. I'm going to tell you that investing in bonds is a leveraged bet on the value of the dollar in the future. So you're just going to lose money even faster if you go to US Treasuries. So what on earth does that leave us with? Okay, so it leaves us with assets that are rare or scarce, really make the most sense. Okay, so Europe again printed $2 trillion to start off their party, fastest money printing in European history. We go to Japan. Well, they've been aggressively printing since 2010, but you can see it's happening at its fastest pace in history. Now, China doesn't have that free trading currency or the big bond market to do typical QE. So they just lend it into their own economy and dilute the currency directly. Okay, so the last time China did this level of money printing was 2016. Okay, so what did we get from 2016 to 2020? You thought it was all Trump with tax cuts? What if I told you it was really all China devaluing their currency at one of the fastest paces in history? Okay, maybe a combo of both. But regardless, we got China, Japan, Europe, and America in a currency war. There's no other way to put it. They're in a currency war. And they've told us when they're going to stop doing this. So the Fed's told us they're going to keep interest rates low and continue to do aggressive QE until they get two things achieved. They want the new CPI, which is a bogus number, but that's what they work on. They want the core inflation rate to hit 2.5. They want it to stay above 2.5 for as long as it's been below. Okay, so they want to look at how long we've been below 2 and run it hot at 2.5. So you can see we've already been running below 2 for the last 9 months. That means they're going to keep rates at 0 for probably 6 to 12 months after we get the CPI at 2.5. Now, what should we anticipate occurs by the time we get to 2.5? And the other mandate of the Fed, it's to restore the labor market. Okay, so I've gone back through history to look for collapses of the economy of this magnitude. It's World War I, it's World War II. It took half a decade to recover the labor market in both instances. So bottom line is we're likely going to see massive devaluations of currencies, high levels of true inflation for the next 5 to 10 years minimum. And you can likely get the best returns of your lifetime during this period. Okay, and it's because the dollar is going to get crushed. The euro is going to get crushed. Every currency is going to get crushed. The value of bonds, which are a leverage bet on the future value of currencies, are going to get crushed. So where can we park our cash? And it really leaves us with very few options. Here's a look at the dollar compared to other currencies recently. Okay, it's just falling off a cliff. So you don't want to be in the dollar, you don't want to be in bonds. What we really want to do is focus on things that are scarce. So Apple is actually becoming more scarce over time. They are buying back their own stock. That means they're burning the number of shares available. So while your government is flooding the market with new dollars, making each dollar worth less, Apple's doing the opposite. They not only are they making more money than any other company on the planet, they're reducing the number of shares that have access to those profits. So you want to be in the scarce assets, okay? And there's nothing that's becoming more scarce than this group of stocks right here. So I think you're starting to figure out why stocks go up. Okay, let's go ahead and continue. And just another look at the dollar since all this money printing happened. It's just falling off a cliff. Just truly remarkable. And really sad, what's going to happen to all the people who rely on a paycheck week to week? They're going to be pissed because their income is going to stay the same and the cost of all the goods and services in the economy are going to rise, especially now that we're reopening. Okay, so let's go to the next position. So we've already got our tech position. That's 8 shares of the triple Q. It's going to outperform buying those stocks normally 20 to 1. Okay, so immediately, you're better off in the triple Q than any other stock investment, period. It's just a far smarter way to put your capital to work. 70% of our portfolio is long those tech stocks. We're going to hedge with UVXY, the ultimate crash insurance. This is a light hedge. If I really were scared of a serious sell-off, I'll double or triple that for you in a heartbeat. That would mean taking some of our offense a little lighter. We're never going to leave the offense completely. The next play is to go long Bitcoin. Okay, I think you finally can understand why people are going crazy about Bitcoin. Bitcoin went under 30 grand. Grab some Bitcoin. Okay, this is about to go mainstream. We're getting hedge funds starting to load up on it. They're all extremely light. Bitcoin has huge advantages over gold and silver, namely that it's not being suppressed by central banks, okay? So Bitcoin is a beautiful play. It also gets you off the grid. It's not using our normal payment centers. There's just so many reasons to have a small position in Bitcoin. So we like GBTC, so you don't have to go to some crazy crypto site, and you can do it in your normal brokerage account. So now we're going to pick up 2 shares of GBTC because the world is in a currency war. So you're picking up a 5% allocation. All right, that's the next position. Let's take a look at what Bitcoin has done recently. So just since April, you could be sitting on as high of 160% gain just in the last few months. This is one of the only assets that's keeping up with the triple Q. Okay, they're going neck to neck, back and forth. Now, if you do upgrade to our premium webinar, this content is going to be extremely drilled down, and we're going to look at lots of very detailed graphs and charts to really expand upon this. But today, my goal is to give you the big picture. So Bitcoin's 5% currency war, there's no end in sight. Okay, $100 trillion of liabilities that the United States government must deliver. The only way they do that is devaluation of their currency. They don't have enough income. Very easy prediction on that. And here's a little short-term look. This is a beautiful pullback. It's hitting this resistance right here. I would definitely be getting my Bitcoin position built today. And again, it's 5%. Okay, so let's go to the next position now. The final position is going to essentially be hedging against inflation. Now, if it were a Republican era, we'd be long oil, or rather oil companies. With what's happening with the Biden administration, it's all about climate change. These guys want to get oil out of the picture. They want to go to clean energy. Okay, the most important resource for that is going to be by far copper. Okay, you can go into some other smaller markets. This is the largest market. It's about 1/15 the size of the oil market. And in an inflationary environment where we have a clean energy, green agenda, you can't go wrong owning copper miners. So we like COPX. Now, let me show you some of the returns that you can make. And also, this is going to be a really good predictor of the futures, comparing the value of copper to gold. Okay, both commodities are huge and scarce and a great investment. Okay, but we're going with Bitcoin instead of gold and silver. It's much more exciting and has better prospects into the future because it's a technology serving the same purpose as gold and silver, but it's more advanced. It's really the future. So gold and copper ratio tells us where we're at in the economy. Copper is going to go up against gold if we're having real inflation, demand side, and we're really recovering. Okay, and that's exactly what we're anticipating. If I thought the opposite, we'd be heavier on UVXY. So we're expecting copper to scream higher, copper miners to deliver massive gains. And guess what? The tech stocks don't exactly appreciate that much. They don't like rising interest rates or too much inflation. Eventually that becomes a problem. So not only are we going long copper miners from a greedy perspective, it's actually a great hedge against rising interest rates, which tech stocks are sensitive to. Okay, and you throw in the climate change agenda of Biden, this ETF can scream higher for many, many years to come until that inflation gets too hot. And again, I think that's going to take quite some time. So let me look at FreeportMcMoran is one of the key positions in COPX, which again is going to diversify you into all of the copper miners. That way we don't have a single risk in one company. But just look at this massive gain that we had the last time we did a crash. And you can see FreeportMcMoran climbed over 440% in just 2 years. And what's FreeportMcMoran doing right now? It is skyrocketing higher. Okay, now I do this in comparison to the purple line, that's XLE. So again, if we were in a Republican era, I would be putting you into oil and gas companies. We're not. Okay, we're in a clean energy program. So we want to go with COPX, copper miners. And here's just a look in the short term of FreeportMcMoran. Again, you're going to have, this is your second largest position in copper miner, COPX. You can just see this massive, massive bull market forming. And again, what's our predictors telling us? It's in a clear uptrend. We're recovering. Now that the election's over, the pandemic means nothing. Okay, look, they're reopening California, New York. Schools are reopening, just announced yesterday in in our state. So we're going to be pushing inflation hot for the foreseeable future. This is going to be beautiful for this portfolio. There's really only one thing that's going to stand in our way, and I think we're years away from it, and that's when the bond market becomes fully priced in. Right now, when we do QE, we're suppressing yields on bonds. This allows the government to borrow trillions of dollars at super low interest rates by devaluing the currency. So we're anticipating they're going to suppress these yields for probably 5 years minimum, maybe 10 years. And the bottom line is that makes the investment in bonds unattractive because you're going to get paid a yield lower than their CPI. Okay, so look at that. If I buy a 30-year bond, I get paid 1.75, but they're telling me the current inflation data is 1.6. Why on earth would you do that? You wouldn't. So what's likely to happen here, these are going to rise all the way to 3. I don't think we'll get to a new high. And that's when we'll make a big change in our portfolio to cash out some profit and go aggressive in bonds. But what's going to happen right now is you'll likely lose 50% of the par value of a treasury bond in the next couple of years because we know where these rates are going. If you want to borrow trillions of dollars, you're going to have higher interest rates. Really simple. So bottom line is until this CPI gets to 2.5 and sits there for a good half year, you want to bet up aggressively. Now, can we get out of control inflation? Let's just look at this. And again, we're looking out for this for you, so you don't have to worry about it. The only disaster where I would get out of tech stocks and bonds for that matter would be if we got out of control inflation like the 70s. But you can see for the last 4 decades, we've had deflation overall, not inflation. So it's a big what if. We could go decades from here without that inflation everyone's worried about. If that happens, what would occur? Well, let me show you what happened in the 70s. Okay, in the 70s, we got a 10-year bear market in stocks and bonds. And the only thing that went up were precious metals. Okay, so if we do get into a hyperinflation era, we're ready for it. We'll teach you what to do. I'm going to promise you that's not going to happen anytime soon. Okay, not until the economy is fully recovered can we even begin to worry about that. Okay, Dean, so that's the bottom line. Let me walk them through the portfolio one last time. So to sum it up, let's say you had $25,000 to invest. This calculator is going to tell you exactly what to do. We're going to start off with 236 shares of the crash insurance UVXY. We're going to go aggressively long tech stocks with 172 shares. And ignore these, I got to fix that. We're going to pick up 43 shares of GBTC, and we're going to protect against inflation or rising interest rates, playing the Green New Deal with copper, COPX, 129 shares. Okay, so that's the secret formula that we're recommending and have been very few changes. We've done very few changes, a couple trades a month, and we are greatly outperforming our target of 25% a year. In fact, we're up 20% just the last 2 months. Okay, Dean, go ahead and take it from here. We could run the poll and continue to go through some of the Q&A with our crowd here. And again, if you guys do take up Dean on a special deal today, what I will do is take your total assets and I'll give you a screenshot with exactly how much capital to put behind each trade, plus give you our boot camp, which I'm going to quickly tease. Boot camp is averaging over 10% a month. It's hyper aggressive. It's the same strategy, and it's going to go into smaller markets. So instead of going into the triple Q, we're going to go into F and GU. Same idea, just more aggressive. We're going to go into Gush currently. That's playing these fracking companies. We've more than doubled our money on Gush already. Okay, we have Nugget, the gold miners, 2 times. We've got a huge Bitcoin position, and we're long medical marijuana, which again, the Democrats want to legalize. This is the top performing ETF yesterday. So again, that'll be our more aggressive portfolio. Typically, after we've done an analysis of where you're at currently, we're going to put anywhere from 50 to 80% of your capital in the safe alpha. Then we're going to put anywhere from less than half, probably 20 to 10% of your capital in our more aggressive boot camp. And finally, I'll leave it here. If you are over $500,000 in net assets, we're going to get you in the pro strategy. Pro is going to be hyper defensive. We have twice the hedge as a rule, and we're going to diversify into all of North America with the S&P 500. So we're not allocated just to tech. We're going to get all of Asia with emerging markets, so China and all of its trading partners. And then we're going to go get all of Europe, Japan, and Australia. So instead of trading the $15 trillion NASDAQ, you're going to be trading the $100 trillion global stock market. And then we're going to expand into spot oil. You'll still have copper miners. You'll still have Bitcoin. We're going to go long uranium, nuclear power, Belt and Road. They're building 20 nuclear power plants right now. Uranium is going to explode higher for the foreseeable decade. And then we still have silver in here as well. Okay, so that'll be our pro strategy. Okay, Dean, go ahead and take it from here.
Okay, great. And real quick, Jason, I know Hugo was looking to potentially build out the pro portfolio. And just real quick, folks, I did post that poll. If you guys can take just a few minutes to fill that out. If we do have some millionaires and multimillionaires in here, Jason can get you built out on our safe growth pro strategy as well. The easiest way to refer to it is just the pro. Really, that's what all of our millionaires, multimillionaires, decamillionaires are using for their portfolio structures. Okay. So Hugo, anyone else want to see the portfolio that we built out for our millionaires and multimillionaires, decamillionaires and above? Okay. And don't be shy, guys. It's a little bit more conservative, guys, but feel free, to let us know if you do want to get that built out. If not, guys, the safe alpha is
I don't see the poll. Oh, there it is. Okay, great. I do see it now. My bad.
Okay, and Pettit, do you have more than $500,000 to invest total? Okay, I saw you said yes. Okay. Okay. Yep. And let's see here. Kathia Lehman would like to see it as well, Jason. Beautiful.
Okay, great. Let me walk you guys through the pro. So pro is, well, we're on a down day. So pro's huge hedge is really kicking into high gear here. Pro's going to essentially take the same concept, same investment strategy, but we don't want to be so concentrated in US tech. So we're going to look at how can we diversify that risk as much as humanly possible. So we still want to use free money from these ETFs and get 20 times the return. But instead of owning only 100 stocks with the NASDAQ, we're going to start off by going into 505 companies with the S&P 500. Okay, so that's all of the most important companies in North America. And realize all those old school S&P 500 companies are slowly realizing, okay, we got to convert to a technology company. So they're all slowly but surely converting as fast as they can into e-commerce and creating technology in their firms as well. So I like the S&P 500 a lot. It's the most liquid market in the world, and it has the most assets under management in the world. Nothing even comes close. In fact, you probably have to add up just about every other ETF that exists to get close to the value of the SPY. Now, again, we like UPRO because you get 3 times the return for free. Okay, if someone wants to triple our exposure for free, we're going to take the triple exposure. Now, US stocks are trading at 22 times multiples. They're expensive. Okay, China and Europe are trading at 16.5. Europe's even less. So we want to get some value out there and expand into the $100 trillion global stock market. This is where all the billionaires have all their wealth stored. Same thing you'll be doing. Okay, EDC is going to give you over 3,000 companies spread out through Asia. Okay, so it's mainly China, South Korea, Taiwan, India, Russia, Vietnam, all the high growth emerging market countries. You have every single company that's important in EDC. Okay, Tencent, that puppy is just screaming higher. It's now nearly at $1 trillion market cap, trying to get into the league of all our tech giants in the United States. Okay, Japan has been brilliant with their investment strategies. You're going to get exposure to Japan, the UK, Germany, Australia with EFO. Okay, so between these three, it's $100 trillion market cap. You own every large corporation that exists. You've spread out your money as much as possible. Okay, so you're going to get an A+ for diversifying your capital and reducing risk. You have no risk of US politics anymore. You're overweight China, who's growing, the only country to grow last year. Okay, so you got to wake up and smell the roses. China is growing faster than America. It has 4 times the population. And they're going to take the lead. Like it or not, you really want to have that exposure. What else are we going to do? Instead of just being long copper miners, we're going to go spot oil. What do these Democrats want to do? They want to tax the hell out of anybody in the oil business so that there's less consumption. So they want the price to skyrocket. Okay, they're not trying to create more demand for oil to make the price go up. They're trying to tax it. They're trying to make it more expensive to use oil. So the cost of oil is going to skyrocket in a Democratic-led US government. Okay, so go look at the cost of gas today and tell me the cost in a year. It might double. So we're long oil. We're long copper miners. Okay, that's critical for electric batteries, but for really building anything. China's the growth engine of the world. They're the biggest consumer of oil and copper. Okay, we want that sliver of Bitcoin for all portfolios. It's really a brilliant solution to the problem that governments have created for themselves, which is that you cannot trust a centrally managed currency system. You just can't do it. They will always print money and hand it out to their cronies. It's not fair. And it's happening faster and faster. We just showed you that. Uranium, the biggest infrastructure project in all of history, is this massive. It's going to cost $2 trillion a year for a decade to build it out. It's massive. Everybody from Warren Buffett to the Rothschilds are trying to get their hands on this Chinese project, which is essentially going to save China. You got to realize China's one-child policy is going to collapse their economy in the next decade because they have no one to take care of everyone who's going into their mid-40s right now. So the next decade will be the best for China, but then their demographics fall off a cliff. They will collapse unless they essentially adopt massive amounts of people who are young. Where are all these people? They're in the Middle East. China is assimilating the entire Middle East. They're fighting over Africa and South America as well. But this is essentially going to be massive infrastructure connecting Asia to the Middle East. And it's going to build 20 nuclear power plants along that infrastructure. So uranium is a huge part of the future. Bill Gates is aggressively working with the Chinese to do this. 20 nuclear power plants are in production now. So we want to be long uranium, and then we still like silver. I do see silver melting up aggressively. That's the old school central bank play for the same idea of Bitcoin. And again, it's just a little safer bet than Bitcoin. So we have a huge silver play. Again, quantitative easing hedge. So this is where all our millionaires have their cash stacked. It's been averaging anywhere from 3 to 10% a month, and with a lot more diversification and many more uncorrelated assets. So for those of you who want to go park $1 million so you don't watch it get just devalued, here's what that would look like. You would buy 17,382 shares of UVXY. That's your crash insurance. It's huge. We're up 20. We got a 21% crash insurance play. You're invincible to stock crashes at that level. Invincible. We're going to pick up 1,830 shares of UPRO. That gives you all of the North American top companies. And again, as they grow or shrink in size, your ETF automatically rebalances. You do nothing. EDC gives you 3 times your money on the ETF EEM. That's 3,000 companies in Asia. We're going to pick up 3,659 shares of EFO. That's going to get you Japan, Europe, Australia. We're going to pick up 1,830 shares of UCO. That's betting that oil is going to get taxed to hell by the Democrats. Price is going to go up. Copper miners, that's the Green New Deal. That's climate change. That's electric vehicles. COPX. That's your inflation hedge. Okay, Bitcoin is betting that governments cannot be trusted with the printing press. They cannot for the next half decade at a minimum. Uranium's betting that the only way we power the grid in the future is with nuclear power. That's aggressively happening right now. We got Bill Gates, Warren Buffett partnering with the Chinese to do this. And then we got silver. Okay, silver is in a shortage. They're not finding much of it. And this is going to explode higher as we reopen the economy, suppress bonds, and let inflation run hot. I'm seeing a 1,000 to 3,000% gain ahead for silver. So we love that position for our pro. Okay, Dean, so that's the most advanced, sophisticated portfolio we offer. For most of you, though, this is the best bet. This gets you started. It's red hot. It's extremely hard to outperform, mainly because these companies like Apple, Microsoft, they just have so much advantage. And there's no taking it away from them.
Yep, beautiful, Jason. Okay, great, and beautiful. And let's see here. I'm going to try to pronounce your name here. I'm going to say Katia. Is that Katia Lehman? If you have your mic, feel free to go ahead and unmute there. Yes. So, and she was also asking about the crypto choices. Very nice. And yeah, if you have your mic, Katia, go ahead and unmute it and interact with Jason there live. Hugo, I want to encourage you to do so as well. Okay, so I'm going to allow both you guys to speak. Your mics are unmuted because I know both you guys were looking to invest a larger tranche of money. So I wanted to just introduce you here to Jason live. If you guys have a few minutes, feel free to go ahead and ask those questions live. You have a couple questions in the chat box there too, Jason.
Okay, great. Yeah, so we're only going to be recommending Bitcoin in the core portfolios. We have a altcoin crypto portfolio. I don't even want to show you the returns on that. It's insane. We're up a ton in that portfolio where we go play Ethereum, Ripple, all those. So that's a bonus when you do upgrade. I'll be giving you my crypto plays. So Kathy, that would be how you get access to that. For the core portfolios, Bitcoin's the best bet. We don't need to get crazy. It's really hard to outperform Bitcoin. To be honest, Bitcoin's the best, safest way to play the currency debasement for the majority of our capital. After that, the only one that's given it a run for its money is Ethereum. And it's only during very particular parts of time where Ethereum can outperform Bitcoin. After that, very few cryptocurrencies have ever outperformed Ethereum. So you got to be really careful and play your investments smart. And use small amounts of capital to play crypto. We're not getting people overextended in the cryptocurrency space. Now, coming up are our premium webinars. If you like what you just saw here, this is just the big picture. I'm going to drill down to the details in our premium member webinar. So the first one begins in an hour and a half for Safe Alpha. And then an hour and a half after that, the pro webinar does occur. And that's where I really drill into the very nitty-gritty details of each of these portfolios. And live, I build out your portfolio. So you tell me how much money you want to invest, and I punch it in, screenshot it, and get it out to you. Also, I'm going to kind of coach you through some common sense. We're going to talk about how much money you have, what are your needs for capital in the next 12 months, how much income do you have, and then we can talk about how aggressive you want to play. And I can tell you what percentage of your money should be in each portfolio. If I were in your shoes. Of course, it'll be up to you to pull the trigger on that. Okay, Hugo, go ahead. What questions do you have, sir?
Okay, Hugo, and your microphone is unmuted, bud. Go ahead and feel free to.
In order to. Oh, either unmuted or muted.
Yeah, there we go, Hugo. We can hear you great.
Okay. Right now, I'm fully invested, the whole 5.6 mil. But if I need to, I'm thinking about 100 grand, right? I need to sell, but then I have tax consequences.
Well, that's true. So, what you want to consider is the long-term future. So, we're setting you up to buy and hold for decades to come with very little trading.
Yeah, I prefer that.
And we're protecting you against downside risk. So I would be putting 100 grand into the pro, and
to begin with, I put 100 grand, and then see how it goes. Then maybe I should do. You so far you have 3 portfolios, right?
so yeah, if I were you, I'd probably be putting something like 4.5 million into the pro as soon as possible, so that you're protected. I don't think you're going to be protected right now, which
No,
is
I'm not
alarming.
protected.
Oh my God,
Yeah,
yes.
he
So
I'm
I would.
told me.
driving without a
He,
helmet.
yeah, he told me yesterday he's on the motorcycle without the helmet, Jay.
Yeah, I would get converted into the pro with 90% of my capital as fast as possible before something bad happens. So you're protected. Okay, so you will realize some gains, but then you can be protected for the long term. That'll be very important.
Well, also, I got 1.5 million in Apple. So what should I do?
Yeah, so we're going to own all the same companies, but with better ETFs that automatically rebalance over time.
Right.
Yeah, and we're going to have a huge hedge for you. So yeah, I would say get 100,000 liquidated to test it, and then once
Okay.
you're confident, you want to go all in with this. This is
That's fine.
smarter.
That's what I
Yeah.
need anyway.
So I would put probably 4.5 million in the pro, and then I'd probably save $1 million to do the 2 bootcamp portfolios, and you're going to have a really, really great experience with us.
Okay. So who's gonna call me later? We're gonna talk more about
Dean will
this.
get you hooked up,
Dean?
and
Okay.
and then yeah, so I'll build you out 3 portfolios. You're going to get 2 webinars this evening, and we'll custom build your 2 portfolios out live, okay? And then tomorrow will be the boot camp webinar where we'll do your boot camp portfolio.
Okay. The other thing is, you said after an hour and another hour. I have an appointment at 3:00, so I
Well,
might
that's
have.
fine. It's every Monday, Wednesday, Friday.
Oh, you repeat? Kind of.
Live with my whole group. It's a small family, and you'll
Okay.
get to meet all of them. And yeah, so I take care of everybody live every Monday, Wednesday, Friday to customize your portfolio and get it out to you with a screenshot, so you know exactly how many shares to purchase of each asset.
Okay. So I have
And
to.
it's recorded, so you can replay it after you get home as well, just to watch the content.
Recording?
Yeah, everything's recorded, so you can replay it later as well.
Oh, okay. Okay.
But yeah, most likely you want to get into the pro program that comes with all 3 products.
Okay.
And then we'll get you a custom portfolio built. We'll start small so you can feel safe.
Yeah.
But
Especially
yeah,
my wife. She wants to see results.
Yep.
yeah, I guarantee you're going to like this setup better than what you're doing. You do really well when the market goes up,
Yeah,
but
I know.
you get hammered when the market goes down. So
I know. I can already feel it today.
So with us, pro is up today. Okay, my pro strategy is up today because we have a 20% hedge.
Yeah, I heard that. Yeah.
And just Hugo, if you don't mind, bud, what did your portfolio have in drawdown today? Is that a couple 100,000? What does that look like for you?
No. Today it's around 60, but couple of days last week I was down 250,000.
Right. Yeah, we'll get
That
that
just
hedge in
won't happen
place.
anymore.
Yeah. Yep. That's why risk parity is beautiful, Hugo. And then you're also going to, with the pro, you're going to have 9 assets that counterbalance each other on top of having that huge hedge too.
So look at this. If you had $1 million long UVXY, that position would be up, which is what I would have you in right now. You would be up. Okay, you would be up $200,000 on your defense.
Okay.
Right now.
You mean later I can cash it and invest it somewhere else?
So so we want to cash out insurance when it's up several 100%. Otherwise, it just acts there to make it hedges. That's what it does. So we don't want to.
You want hedges all the time, right? 100%.
Yeah. So imagine if you had followed my trade alert, if you had converted 100% yesterday.
Yeah.
You would be long $1.1 million long UVXY. It's up 20% today. So you'd be up $220,000 right now on the defense, which would be more than you're down on the long side.
Right. Okay, so Dino's gonna call me right later.
Yeah.
We'll take good care of you. The millionaires love this product more than anyone else because mainly on down days we make money. That's a huge benefit for anybody who's got more than $1 million.
Yeah, but right now my main worry is my tax. Because last year I have a
but the
capital
market
gain of
falls.
1.1
If the
million.
market falls 35%,
No tax.
okay, you'll have a tax write-off.
Yeah, I know.
Yeah, and an awesome interaction there, Hugo. That was beautiful. Great questions. Very, very good. And yes, I'll call you, Hugo. As soon as I get off this webinar, bud, you'll be my first call. Okay.
Okay, that's fine.
That way we can get you to your meetings.
Okay. Thank you.
My pleasure, Hugo. Thank you for the interaction, bud. That was great.
Yeah.
All right. And I'm going to try it one more time. Is it Katia? Maybe? Katia? Miss Lehman, you're going to have to tell me how to pronounce your name, okay? I see your microphone is unmuted. Okay. And Katia, if you are there, and if I'm not sure if that's how I pronounce your name. I know you said it rhymes with Nadia. But I don't know if I said that correctly. I see your microphone is unmuted. If you want to go ahead and ask any questions you have. Okay. Very nice. Okay, so maybe Katia had to step away for a minute there. Okay, guys, looking good. So thank you, team. Appreciate your time there. We're just going to cover the portfolios really quickly one more time here. And what we do is we specifically talk about the Safe Alpha and the Absolute Alpha Bootcamp, and then specifically our Safe Growth Pro. We cover that exclusively in our 3 o'clock webinars every Monday, Wednesday, and Friday. Typically not something we give away during the free trial, but Jason will show it to all of our clients just to show them how incredibly diversified it is, that there's actually 9 asset classes that counterbalance against each other, and then you have a wonderful hedge in place. And as Jason stated, that portfolio is actually up today while the market's taking a little bit of a breather here. So pretty cool. Okay. Okay, cool. And yeah, Katia, so I think, okay, very cool. Yeah, and Katia said, just stumbled on this yesterday. I need more background on who you are. Yeah, so Katia, so let me show you our pictures actually too. That's always something good to do. I have a gentleman in Colorado that said, Gene, I won't do business with you until you show me your picture. So I always thought that was kind of cool. He's actually the first person that had told me that. So I actually got some pictures of Jason and I into our strategy here. Okay. So let me scroll down here, guys. I'll get some pictures of our team. Okay, and we're going to have to add Jeff in here too, because he just joined our team actually this week. And so you will see Jeff Olson added into this mix here. But this is Jason, guys. This is our founder and our chief investment officer. The core part of the presentation came from Jason. Okay, you're now hearing from me. I'm a partner and chief investment consultants, guys. What I do is specifically work on clients, help them understand what we do, what risk parity is, who made it famous, why we've studied it for the past 18 years, and why we help clients build risk parity portfolios today. Okay. And just real quick, guys, on Jason and I. So, and great question, Katia. Okay. Let's see here. Okay. So, and if you have your microphone, Ms. Lehman, go ahead and just pronounce your name for us, if you can. Okay. Hey, Dino, thank you. Dino said, great team. God bless. Hey, Dino, super excited to work with you, bud. And seriously, email me those fees that that the advisor sent over. We should really sell against that actually in the webinars each day. I think that'd be hilarious. Okay. but yeah, guys, so this is Jason and I. Okay. So we both started doing paper trading at 16 years old. All right. Jason actually won a paper trading competition when he was 16 years old at the Albuquerque Academy. At 16 years old, I had a really good family friend, guys, that helped turn about 350K into 5.2 million after he retired, before he passed away of cancer, unfortunately. But he taught me risk parity at a young age. He taught me about the stock market at a young age. And he was the first person that basically showed me how to put it in a paper trade. And I'm not kidding you guys, when I did this, I literally physically wrote down my paper trade, okay, and handed it to Gary. Now, my first paper trade was Apple. Okay. My first real trade was Apple, actually, too. My first investment was Apple. I bought 5,000 shares at $2.52 a share. Okay. I then sold it a quarter later because they just came out with the iPod. I knew it was going to revolutionize the world. Certainly it did. And long story short, I made about, I made about a little over 10 grand as I was 18 years old. In the span of 3 months, I thought I was the smartest person on the planet. Well, little did I know that that would be more than a $20 million position today. Okay. Anyways, long story short, I was very fortunate, guys, to be able to learn from my family friend at a very young age how the market works, how to create a risk parity portfolio that will produce growth in up and down markets. Okay. Jason and I actually met in college. We met our first year of college. Jason he actually had a business. Ryan was one of his programmers. Okay. And I think actually at the time, Ryan was a designer and programmer for Jason. Worked for him there. I was super interested in what Jason was doing because he had a cyber infrastructure company, guys, that was teaching people how to build websites. Yeah, and he's 18 years old, has a staff of 6. I was like, oh, that's a neat guy. I haven't talked to him. So, anyways, long story short, I get to know Jason and his business. Jason gets to know me and how I'm investing, right? And we're both interested in what we're doing. Okay. And then, so literally, that's how we started our first financial publication company. That's literally, kind of long story short, that was the birth of what we do today. Okay. We did start a company right out of college. Okay, we had over 23,000 customers in more than 45 countries before we sold our interest in it. Okay, and we now have a employee-owned business that's incredibly fun to operate. So it's really neat, guys. We really pride ourselves on having an employee-owned company. Okay. We had outside partners previously in our last firm. It was kind of a long story short. We didn't see eye to eye with a lot of our partners. Okay. We were more focused on the client result. They were more focused on the revenue. So we separated. And so that's how we formed Portfolio Builder, formed that back in 2017. Okay. Jason originally created a cryptocurrency portfolio that returned 1,100 plus % return for 2017. Basically got out of the crypto side of things. Then he formed the first portfolio we formed was the Pro portfolio. That's what all of our millionaires are using today, and really kind of counts over 500,000. Started that then. We started the Safe Alpha portfolio in 2019, and we've just recently launched the Absolute Alpha Bootcamp portfolio that is smoking all of Kathy Wood's ARK investments. It's so funny. I get questions about this every day. Guys, CNBC is pumping the hell out of these ARK investments. Okay, there's so many better performing vehicles in ETFs. What she does is okay. Okay, but look, there's so many things far superior to her. Okay, and you guys got to understand that there's a relationship that if you understood what the relationship is and CNBC pumping this, you probably wouldn't be comfortable. Okay, so very good. Yep, exactly. Dino says ARK Investments pump City Central. Exactly. So you guys got to watch out with all the garbage CNBC pumps. Okay, they're on there pumping stocks and pumping investments for a reason. It's because they're getting paid to. Okay, and unfortunately, I'd say 99% of the people I talk to don't understand the finance business well enough to understand that. Okay, but just be careful. Yep, Motley Fool as well. Exactly, Dino. Yep, they're getting paid to pump these stocks, guys. Okay, so be extremely careful when you listen to these media pundits, right? Okay. So let's see here, and I'm going to start looking through some questions. So, Kathia, I think that explains our background pretty well there. Okay, so that's really how Jason and I got into this business. We actually worked with over 30 different hedge fund managers, investment gurus with our past business. Jason and I kind of worked on the back end and the digital infrastructure side. Learned a lot, saw that we were actually getting better performance than a lot of our gurus. We said, why do we have other people doing this for us? And why do we have these business partners we don't see eye to eye with? So we started our own firm, right? And that was the evolution of Portfolio Builder. So that's the team, guys. That's our faces. That's what we look like. Okay. So on that, let's see here. And Kathia said, I need a crypto-centric firm, though. I like what I've heard to simplify my numbers of positions. Too many SPACs and warrants. I need full bios and performance bios. Yeah, absolutely, Kathia. So just take a look at the emails that we send you, Kathia. All that stuff's involved in there. Okay. And then we just did a pretty in-depth bio on Jason and I. Okay, let's see here. Yeah, we don't care about the ARK ETFs, not one bit. Let's see here. She said, I'm also interested in going into a whole S&P 500, as I explained above. Yep. Yeah, absolutely. Get the S&P 500 is what our Safe Growth Pro portfolio is using for one of the core positions. Okay. So very cool. Very, very good, guys. All right. So just real quick, this is the Safe Alpha portfolio. Once again, guys, we're just going to take a look at this, highlight the results, and then we're going to get you guys some nice specials here today that are going to be available only in the webinar. Okay. So this is the total growth here, the Safe Alpha portfolio, guys, all the positions in it. Okay. And we just got into this GBTC position yesterday, actually. Okay. So this is our newest position, not showing on it, profit on it quite yet, but not in any way, shape, or form worried, folks. We're going to be holding this for a long period of time. Jason's looking for a $50,000 to $100,000 price target this year, and more like $250,000 before we get out of this massive quantitative easing and currency war cycle. Okay. All right, guys. Next is our largest position in this portfolio. It's the TQQQ ETF. Hey, here's an ETF that smoked all of Cathie Wood's last year. Weird. You don't see this one being pumped on CNBC every day. Weird. I wonder why. But anyways, guys, this is pretty cool. This is our largest position. This represents a basket of 103 of the best companies in the United States. There's wonderful companies in here, guys. These companies have monopolized the world. The top positions here represent about 70% of it. Some of the largest tech companies in the world, they've monopolized the world more than we've ever seen ever in history. Okay. So if you think about it, guys, and I tell this story with my clients all the time when we talk one-on-one, but I haven't done it in the webinar. I think I'm going to bring this out today. So if you look back, folks, in history, right? So I'm a huge proponent of history. So is Jason, so is Ray Dalio. Okay. And there's a reason for that, because there's economic effects, right? But here's the thing, folks. If you look at the Vanderbilts, the Rothschilds, right, the Morgans of the late 18th century, early 19th century, when they had monopolization on just North America, in literally just sections of North America, okay, they were able to basically become what in today's money is basically trillionaires. Okay, that was with monopolization of a small portion, really, of concentrated in North America. Sure, they had some stuff in other countries, but their concentration, 99% of their business was in North America. Okay, think about this. These people now that are the richest people on the planet, and Jason just showed you the list of their names, they have 99% of their net worth in the stock market. I wonder why. Well, number one, folks, it's because they control every central bank on planet Earth. Okay. The central banks control the stock market, the bond market, the precious metals market, and the value of all fiat currencies. Okay. And then they control the governments too. Super easy, right? That's a little more under the radar stuff that you have to look into a little bit more. Happy to explain it more one-on-one. Okay. But they own the governments around the world. They own the central banks around the world. That's why they have 99% of their net worth in the stock market. Okay. Why? Because they're simply going to ensure that they go from being billionaires to trillionaires. Okay, and that's their goal. So, folks, when you own this ETF, you're going to attach into their ecosystem and their coattails. Okay, so very good. So yeah, Kathia, let me send you a link there, and give me 1 second. I will be happy to do that for you, ma'am. Okay, and thank you so much for joining, Kathia. I do appreciate it. And yeah, just click on that link there, and you'll be able to see all of the different portfolio structures. Okay, and we absolutely look forward to working with you, Kathia. If you have any questions, just call me after. It's 505-322-7515. Yep. Yeah. Dino saying, yep, please stay away from the pumpers like they advise. Like Kramer said back in 2008, buy Bear Stearns stock with both hands. And we all know what happened after that. Yep. They went bankrupt. Dino, I'll never forget seeing that exact episode. Because as at the time, I really I really didn't understand what what was going on truly in the market at that point. So I still looked at idiots like Jim Cramer and the pumpers on CNBC for advice, right? So yeah, yeah, no, it is on YouTube too, Dino. Yep. So good point. But yeah, guys, just be careful of the stuff you hear on CNBC. There's a lot of pump behind it. Okay. Let's see here. Raoul Paul Microvisions. I know Jason likes Raoul Paul, Kathia. I don't look into it. I really study what Warren Buffett studies, and I really look at what Ray Dalio is doing for his portfolio set. And I there's one or two guys I study outside of that too, but no one would know their name. But yeah, those are the people I study. Warren Buffett and Ray Dalio. They're two of the most successful investors ever in history. Warren Buffett is the single most wealthy, successful investor of all time. He's all about holding long, compounding your interest. That's exactly what we're going to show you how to do here, guys. Right. And I tell people, look, guys, with my TQQQ positions that my family has, my kids have, I have, right? You're going to have to pry them from my cold, dead hands because I'm not going to sell them. And it's going to eventually bring my family into the 50 to 100 million range as far as what I can see and what I'm doing the math on. Okay. So that's just something that's going to be a long position for me forever. Right. And I really don't think it will ever come out of our safe alpha portfolio set, honestly. Okay. And yeah, guys, we have our UVXY here, and it's pretty cool. As we're watching this here, guys, the market's selling off. I think we just cracked a 2.5% sell off here on the NASDAQ. Okay, but our UVXY now is pushing up. So beautiful, guys. Different positions, right? Our ERX is pushing up. Our GBTC has a little pain. Our TQQ has a little pain, but we have our UVXY pushing up to keep the portfolio safe. Super cool, right? So that's the beauty of risk parity, guys. Don't put all your eggs in one basket. Counterbalance all of your assets, right? Build a zen, beautiful portfolio for a safer ride. Okay, so that's a safe alpha. And once again, guys, in the past 2 months and 2 days, that portfolio is up $196,500 in profit. Okay, just went to 196,000. Okay, those are the assets involved. Okay, and when you sign up today, guys, you will get access to Jason at the 1:30 Eastern webinar for the Safe Alpha portfolio. Okay, so you can get you customized, built out, and show you how to allocate. Okay, Very good, guys. So next is the Absolute Alpha Bootcamp. Now, this is our most aggressive portfolio. Okay, and this portfolio is up just shy of 40% now in 3 months. So this is our most aggressive portfolio set, different mix of assets. Okay, all different tickers in here besides GBTC. We do have a little GBTC, and guys, we literally just recently switched out of hedging with silver for inflation to hedging with Bitcoin. Okay, and that's something that's been a brand new factor in the market. I mean, that has not happened until really the very end of 2020 and the start of 2021. Okay, so I know there's a ton of very wealthy gold bugs, silver bugs out there listening to this, guys. I'd very seriously think about repositioning, and call me if you need some more info on that. Okay, 505-322-7515. Okay. Yeah, so we're actually going to be dumping that, Kathia. She asked what ERX was. We're actually going to be selling that, taking a profit on it, and restructuring into COPX. Okay, so that's the copper play that Jason was talking about earlier. So great catch too, Kathia. You're on it on the details. So very cool. Beautiful. Okay, guys. So that is what the portfolios look like. This is the open profit, right, over the last 3 months here on Absolute Alpha Bootcamp, between the overall, right, what we already locked in for profits, and the open. We're right back above 40% here now in 3 months. We'll take a look also at the Safe Alpha portfolio, up just over $200,000 in 2 months. This started with $1 million portfolio, or a 20% gain. So Safe Alpha, 20% over 2 months. Absolute Alpha Bootcamp, over 40%. In our Safe Growth Pro, I know is over the last 3 months is sitting at kind of, I think right around 15%, right? So it doesn't grow quite as fast, but that's its intent. We want a lot more safety and diversity. Okay. Yeah, absolutely, Dino. Dino asked, when you take a profit, do you reinvest it, correct? You don't just cash out. Exactly, Dino. Yep, we want to be fully allocated, right? So when we take a profit today in ERX, we're going to see it go back into COPX. Okay, Jason's going to explain that to you in the afternoon webinar, Dino, because I know you're signing up, right? So he'll cover why we're doing that. And it's a really cool play, Dino, for the Biden administration. Copper demand is going to freaking skyrocket. Okay. So you want to own all the copper miners, certainly. And so we're going to switch out ERX, lock our profit there, and then switch to COPX this afternoon. And then you'll actually see me do that live with my account. Okay. Yeah, Kathia. So yeah. So great question. She asked if she's going to get a link to the afternoon. Yeah, guys, everyone that does sign up in the webinar here today, okay, you will get access to Jason in the afternoon webinar. Okay, it's going to be at 1:30 Eastern Standard Time. You're going to receive, when you do sign up, you will receive a text message and an email link. Okay, that will get you into that webinar. All right. So very cool, guys. So thank you very much for your time on that. I do appreciate it. We're going to go into the later part of the slides here. Okay, a lot of people ask me, they're like, well, Dean, why do you guys always have that downside protection? Doesn't it drag the performance to the upside? Sure, guys. But even with that in place, like, we're still outperforming the market. Okay, so that's okay. And we're going to follow my favorite rules I've ever learned when it comes to investing. Rule number 1, never lose money. Rule number 2, don't forget rule number 1, right? Who created those rules? Well, the most successful investor of all time, Warren Buffett. Like I said, the person I absolutely watch. I've watched every interview he's ever done multiple times. I've read every book he's ever been a part of or has been a part of in any investment book. I've read every single one of them multiple times. Okay. He is long-term, guys. And Buffett is over 50% Apple right now. Okay. And he recently took the position within the past few years. Okay. The last time he went real heavy on a portfolio, I'm going to challenge you guys to do the math on this. Okay. Was actually in the 60s, and he still holds the position today. Okay. So you guys go do some research on that. Call me if you want the one-on-one. Okay. So what's the number one unknown risk to U.S. investors today? Well, folks, it's cash in your account. it's guaranteed to lose, if you're in the United States, by 10 to 15% this year, depending on where you are. That's what you're losing in buying power, because the Fed is printing money. They printed $4.6 trillion last year. Okay. That is the same as increasing the money supply by 46%. We only had 10 trillion in U.S. savings last year in January of 2022, or January of 2020. That was the highest it's ever been in human history, the U.S. history. And guess what? The people that weren't smart enough to go invest that money in 2020, that 10 trillion, well, unfortunately, their buying power across that whole ecosystem, gosh, guys, is down to 8.5 trillion to 9 trillion. How much loss is that in 1 year? That's what just happened to the people that weren't smart enough to invest their money over 2020. Okay. And look, Ray Dalio has very famously said this recently: cash is trash. Couldn't be more true today. Right. So cash is burning up sitting in your brokerage or bank account today, guys, of course, right? Because the Fed is printing money at the fastest pace in history. So you can leave your hard-earned money in the fire. You can learn to invest it safely today. Okay. And so just real quick, guys, we have a webinar only special today. So stay tuned to see the savings you can take advantage of. And there's going to be 3 spots into that today. Okay. So just real quick, guys, so how can we help you and your family? Well, we have 3 portfolios you could build with us today, depending on your goals and risk tolerance. We will cover each portfolio in great detail in the following minutes. Now jump in and ask questions during this process to make sure the portfolio is perfect for your goals. I'm going to go ahead and unmute all microphones so you can speak with me directly. Okay. And feel free, guys, to jump in if you do have any questions. Look forward to those. Okay. And everyone is unmuted at this point. Hey, Trevor, how's it going? And Trevor, I think it's the first time I've seen you in, so thank you very much for your time and welcome in. Okay, guys. So let's go ahead and take a look at our portfolios. And if you guys have any questions, just go ahead and jump on in there. And then just really quick too, I'm actually going to post the daily special in the chat box. So if you can locate the chat box, okay, please feel free to go ahead and take a look at the special that we have for today. And I know, Dino, we already sent you a link to that. So I know you have that, but I'm going to go ahead and post it to everyone else. Okay, guys, and we're going to run 5 spots for this. It's a combo package, so we have to only run 5 because we already took care of one of those spots today. Okay, but so it's a combo package that's available now, and you guys can click on the link to see the details. Okay, so hey, is it Thahana? And hey, Trevor, I see your mics are unmuted, folks. Do you guys have any questions? Okay, guys, so real quick, we're going to cover the Safe Alpha portfolio. Okay, it's targeting 25% return, and we're already halfway to that for the year. So I think that number is going to be a little soft for the year. We did reposition for a blue oval office in mid-November, and it's worked incredibly well. And so far this year, I think the last time we looked, we were up like 9 or 10%. Yesterday, I think we were up at 12, but we had a little pullback today. So pretty cool. That's what the Safe Alpha is doing so far. Our clients love this portfolio. Really, they have between 100,000 and 500. Okay, just because they want to get safe growth of their portfolio structure. Okay, and they're not at the point where they want to just go, as aggressive as possible, because they've started to build up a decent amount of capital. Okay, it's great for investors looking to outperform the market in a safe manner. That's my favorite part about this, guys. We had 80% less drawdown compared to the Dow Jones in 2020. Okay, the Dow Jones fell up to 37% in Q1. Last year, our max drawdown on that portfolio was 6.78%. Okay, this portfolio uses ETFs to be long or short specific asset classes. Had minimal changes throughout the year. We only made 5 changes total in 2019. Okay, we made 10 in 2020. Obviously, the year was more volatile. Okay, and so I think it's fair to expect between 5 and 10 changes per year with that strategy. Okay, so we don't make them often. When we make them, they're critical, and you will have a 24-hour trade replication window to put them in. Okay, now, folks, we have clients in 18 countries currently, and they love that ability to put in the trade within a 24-hour time period, right? So unlike every day trading, swing trading, option trading thing you've ever seen where you have to be glued to your desk 24/7, 365, you absolutely won't have to do this, guys. Okay. So you're going to have 150 hours of live education and Q&A with like-minded investors. Okay. No options used, yet massively outperforms the market. And right now we're running at an outperformance factor, a little over 300% for the start of the year. Pretty sweet. Okay. My 7-year-old is following the system. You can too. And no joke, guys, if you can click 4 buttons on your cell phone to open a position, click 3 to sell it, you can absolutely follow this. Okay, your free bonus, guys, if you just sign up for the Safe Alpha itself, you'll get 30 days access to the Absolute Alpha Bootcamp. Okay, and it's pretty cool, guys. What I posted in there is actually a combo offer that will get you this the Safe Alpha and the bootcamp here today. Okay, so I had some trading this week, so my numbers are a little bit down. So that's your advantage here today. Giving you guys an awesome little bonus there to take advantage of. So understanding our portfolio options, we have the Absolute Alpha Bootcamp. Okay, this is targeting 100% annualized return. Okay, so our most aggressive strategy, obviously. It's very attractive to investors that want larger risk and returns. Okay, this service has a portfolio engineered for massive growth. Plus, we will send out option trades from time to time. Okay, and last year, guys, we only did 6. They did really well for their performance, but we only did 6. Okay. We have other exotic opportunities that you're going to learn about in here too. Okay, there's actually a bonus trade in this that you could potentially make a 10,000% return if it hits. Okay, and you'll learn all about it once you sign up. Changes will be made on a monthly basis to ensure maximum growth of your capital. You're going to get 100+ hours of live education and training each year. You're going to have a sophisticated balance of core asset classes. Many of them are new to the market, and it's specifically growth asset classes, guys, is what this is looking at. Okay. Options are utilized to take advantage of individual companies from time to time. Not often. Don't depend on that, right? But they will come out when we see incredible opportunities. Okay. The Absolute Alpha Bootcamp members also enjoy additional cryptocurrency portfolio in addition to the ETF portfolio. Okay. And option trades. Now, just really quick, guys, on this. The cryptocurrency portfolio that is in there, okay, is literally just cryptocurrencies. It doesn't have exposure to Bitcoin, right? There's 9 cryptos inside of that with Jason's exact weightings. The last time Jason did a cryptocurrency portfolio, folks, it did 1,100% return in 2017. Okay. So real quick, guys, the free bonus is a 30-day access pass to the Safe Alpha portfolio. Okay. And so pretty cool. We have exclusive live webinars and training every Thursday at 3 Eastern time. Okay. Last but not least, guys, this is what our millionaires absolutely love. Okay. This is our Safe Growth Pro portfolio. It targets 15 to 20% return. That doesn't mean Jason's just going to turn it off once it hits that goal, right? Any of our targets, guys, they're just targets. If we go above and beyond it, we're not going to just stop trading, right? Obviously, we're going to always continue to grow our capital in the safest manner possible. Okay. It's very attractive to investors with really kind of $500,000 to 5 million to work with. Okay. And I know for the first time, one of our clients is actually looking at putting about 18 million behind this. Okay. This portfolio will show you how to trade like the top hedge fund managers without the 2% management fee or 20% performance fees. Okay. Really cool. Changes will be made on a weekly basis to ensure maximum protection. You're going to get 150+ hours of live education and Q&A with like-minded investors. Okay, you're going to have a sophisticated balance of core asset classes. You simply buy the ETFs, however. Okay, and this will get you a beautiful, sophisticated balance of 9 asset classes. Okay, and you just buy the ETFs, guys, to get them. You get exposure to literally, no joke, in this portfolio set, 3,000 of the best companies on planet Earth today. Okay, options will be utilized to completely atomic bomb-proof your capital at times. Okay, Safe Growth Pro clients enjoy paying an absolute fraction of what previously underperforming money managers, mutual funds, and hedge funds charge. Okay, it's a flat fee, guys. It doesn't grow when you do. Okay, all of our services, it doesn't matter if you make 40% with us next year, guys. The fee stays the same. It's flat. It doesn't grow as your account does, like it does with the money managers, the mutual funds, and the hedge funds. Okay, we have a flat fee. Once you lock in your flat fee today, it never grows with you. Okay, And so right now, too, guys, the free bonus we're doing for the pro is annual access to the Safe Alpha and the boot camp at no cost. So even if you don't use those right away, you just want to get comfortable with the Safe Growth Pro first, you can start building into those once you feel comfortable. Okay. So pretty cool, guys. The exclusive training is Monday, Wednesdays, and Fridays at 3 Eastern Standard Time. Okay. So any questions from the team here? Okay. So any questions from the team at all? Okay, guys. And just, you know what, real quick, let's show you guys Ron's profit during his trial. Okay. And this is a screenshot from his Thinkorswim account, right? So if you guys recognize this page, well, in this tab, it's the same thing that I'm showing right here. Okay. This is from Ron. He's up in Wisconsin. He used $500,000 at his start, and he made $97,000 during his free trial. Okay. Seriously, $97,019.89 was the profit he made during March of 2020. And kind of fun too, team, because that was the largest sell-off week of 2020. Okay. He sent me this email March 16th. Pretty cool. We had a webinar that our clients were bragging about. Just the people that came to the webinar and talked about it were bragging about making over 5 million on the worst sell-off day. We actually went limit down on March 16th, 2020. The same day we got this testimonial. Okay. Now, Ron was not the only one that experienced massive gains in the worst sell-off week since 1929. Okay. And you guys can go review a few more when you go to portfoliobuilder.io/testimonials. Okay. You guys can go look through that all you'd like. Okay. But I'm going to go ahead and leave this screen up, guys. If you have any questions, please feel free to jump in. Your microphones are unmuted. If you'd like to ask any questions now, please feel free to do so. And I'm just going to put my number on the screen here so you guys can call me if you do have any questions, okay? And my phone number, just going to put it right here at the bottom of the screen, is 505. Okay. 322-7515. So just give me a call, guys. Oops, I tried the bigger pen today, hoping that would be easier to see, and it might have made it a little harder. Okay, so just give me a call, folks, if you have any questions. 505-322-7515. Thahana, Trevor, I see your mics are unmuted. Do you guys have any questions before we hop off? Dino, any questions there, bud? If you have your mic, we'd love to hear from you.
Hi guys.
Hey, Dino, how's it going?
Pretty good. Yeah, and I mean, I don't have any questions. It's pretty straightforward, but I like the fact that you said, you just invest and walk away, and you get the alerts if something changes rather than just buying penny stocks. Because I've been there, I've done that before, and you cannot just buy a penny stock and walk away. You can come back and you're gonna lose like 20-30%. So, like you said, you don't have to watch 24/7 around the clock by investing here. So.
Yep, and that's absolutely, Dino. And hey, thanks for that too, bud. Yeah, it's risk parity is something that most people never hear of or learn, right? And so it's a great opportunity for us and our company, right? But it does take some time to explain what it is, right, and why it's so safe. And so it is a little bit different, guys, than the other stuff you've tried to do. And, the other companies out there are, it's pumping stocks and pumping penny stocks and option trades that they're just front running you on. And, guys, with the assets we hold, we couldn't move these markets if we tried to with our group. I mean, we just couldn't. They're too big. They're too liquid. So, yeah, and thank you for that, Dino. And yeah, it's the peace of mind, right, guys? That's what I love about it. I remember previous to using risk parity and previously always having downside protection built into the portfolio. Yeah, I'd find myself waking up at 2:30 in the morning to check the futures market.
That's the problem I had. You can't slip away from the screen, and I don't want to do that. You constantly have to be there checking, the market and getting the updates. Otherwise, like AMC, for example, this morning went up all the way to 20, and once the market opened, it crashed. Went down to $11 a share. So imagine if you just bought yesterday and just forgot about it. You can. You cannot trade stocks individually takes a
Yeah.
lot of, you got to have it all the time in your hands, and I don't. Like you said,
Yep.
you know. So
Yep.
you guys watch the market for us.
Absolutely, bud. And I'm sitting here watching every major market and all the commodities as we're talking this entire time, guys. Okay. And look, me and Jason love to do this, right? We've had we've had some really good training over our years, and really, guys, what we've learned is kind of a mix between what we've learned from Warren Buffett and what Ray Dalio's taught us, right? Ray Dalio taught us to balance and hedge that risk at all points in time, right? Buffett taught us to compound your money and heck, stay in the market. Well, guess what? If you have your downside protection, you have your risk balance, you can stay in the market all the time and just let the compounding do all the work for you, right? It's incredible. Okay, guys, and Dina, thank you for that. But I do appreciate the sentiment there and sharing your personal experience. That is really cool. All right. Any other questions from the team here, guys, before we hop off? Okay, looking good. So if you guys do have any questions, you do want to speak one-on-one, I understand some people are shy. Just give me a call, folks, 505-322-7515. Dino, look forward to seeing you in the customer webinar at 1:30 Eastern this afternoon. I will be selling my ERX position and repositioning into the COPX position. So I always wait for the actual client webinar to do that, just for full transparency. Okay, so you'll see me in there later. Anyone else that joins today will see me do that in that portfolio as well. And folks, if you do have any questions, just give me a call. And Hugo, I will be reaching out to you, bud. So I'll be calling you from the 505 number in just a minute. So folks, thank you so much for your time. Truly do appreciate it. Look forward to working with you, and everyone that does get signed up today will join Jason in our 1:30 Safe Alpha webinar. All right. And folks, I want to thank you again from the bottom of my heart. Appreciate your time and attention. Truly look forward to helping you and your family grow your money in the safest manner possible. Have a wonderful day, and call me if you do have questions. Bye-bye.